Chakri Lokapriya also joins us on the show right now. Chakri, given all of this healthcare and whatnot, and the fact that pharma has been something which has got a bit of a tailwind in any case, whether it's the CDMO players, whether it's diagnostic or hospital companies, do you think this is the space to bet on right now, healthcare and pharmaceuticals?
Healthcare and pharmaceuticals, healthcare, whether it's the domestic hospitals chain, are probably kind of better positioned because, the revenue growth will kind of remain intact. They'll grow faster than that of the Nifty. Their valuations are also quite high. So, at best, you could expect maybe an 8 to 10% return for the year. On the other hand, the pharmaceutical companies, the export-facing ones, maybe Glenmark, maybe Dr. Reddy, they could actually have a slightly higher earnings growth because, the globe is recovering. And therefore, they also have product launches. So therefore, maybe Dr. Reddy's and Glenmark.
Dr. Reddy's and Glenmark, those are the stocks that Chakri is liking. But Chakri, what is it that you would be compelled to sell given that earnings are fast approaching and given the color that we've got at least from the Q3 update so far?
I think, Asha, I think pretty much everything in cyclical as well as, staples, both are seeing earnings downgrades. I think we'll be lucky if Nifty ends up, with a 5% to 6-7% earnings growth for the next 12 months. So if that is the case, then the Nifty the Nifty returns are unlikely to be much better than that. And so if anything, it's, I think, within industrials, the earnings growth is likely to be faster. And of course, the export-facing ones, which is IT and pharma, will grow much faster than that of the Nifty. And there's valuation comfort there. So what still it is, looking, really sifting through large amounts of rubble and nothing significant out there.
Nothing significant out there, at least at this point of time. But clearly, Tata Motors, the sales data was out for UK, was on the weaker side. That stock has been something that we have been pointing out too. And the fact that Punch has become the largest selling car in the country and overtaken Maruti is definitely something which has become quite a bit of a talking point over the weekend. Within autos, how are you placing yourself, Chakri, especially in the passenger vehicle segment?
Within the passenger vehicles, if you look at the two-wheelers, the revenue growth rate has slowed down. On the other hand, maybe the tractors is picking up. It's not passenger vehicles, but that's picking up a little bit. On the other hand, the Marutis and the Hyundais are still facing the pressure. So against that backdrop, I doubt that, any significant returns because we're unlikely to see any earnings upgrades. Let alone stable earnings. So against that as a backdrop, until interest rates are cut, I think unlikely to see anything meaningful in autos.
Nothing meaningful in autos is what Chakri is anticipating. Kunal, of course, was talking about as to how Eicher definitely could be a buy after the recent correction. And Kunal, which was the other one? M&M?
M&M as well as Bajaj Auto.
Oh, M&M and Bajaj Auto. Okay, I don't know why I recalled Eicher. Okay, in the meantime, let's just revisit some of the other drag points. And clearly, it's across the board. Financials. Union Bank, by the way, is now down almost 8%. ITC, of course, is that demerger adjustment that you're seeing. There's also the Adani group of names which are, facing the heat quite a fair bit. BEL, which was sort of pegged to be the stock for this year, that's also down about almost 3.5% or so. And consumption, Asian Paints currently lower, Trent as well is down. And that can be said about a lot of these auto names, of course, in today's trading session. But Chakri, other than the spaces that we've talked about, just wanted to get your sense on pure play staples as to when is it that you foresee any recovery at all? Or do you think going by, what Dabur's commentary has been, do you sense that staples would continue to be under pressure even in Q3?
You're right. I think, staples are likely to be under pressure even in Q3, whether it's Dabur or you look at Marico. Again, the top line is okay. It's probably growing at about 10-12%, but bottom line is growing only at about 5 to 6%. And along the way, they're losing a lot of margin, and because they need to sustain on a high level of ad spend, they don't have pricing power, and all that is hurting the profit margin. And for FMCG as a sector which already trades at very high valuations, if you don't have the protection of profit margins, then the valuations will drift lower. So I think the stocks are likely to tread water at best or even drift lower.
Okay, so that's a take coming in on some of these consumption names as well. Just taking stock of some of the big movers at this point of time, and just want to put the spotlight as to what's happening with the Ease My Trip as well, because that stock was in focus earlier in the day on account of that promoter clarification coming in. For now, PTC Industries is the one which is doing well. Devyani International, Equitas Small Finance Bank, and then Ajanta Pharma, RBL Bank, these are some of the names in the green, and Nykaa too is in the green, though materially off the highest point of the day. On the losing side, HEG is under pressure. You do have Intellect Design, JM Financial, as well as Inox Wind and IREDA, which is in the red right now. Naresh, comment on the charts of some of these counters which are trading at high volumes. PTC India in this market is actually sitting at all-time high levels. Even Info Edge for that matter is right now down 1.8%, but at the start of the day that was also at all-time high.
So PTC Industries is something which has gone up massively over the last 2 years. So the stock has gone up from say closer to 2,000 rupees back in 2021-22 to almost 15,000 rupees. Tough to take a call here, not a stock which has seen a lot of institutional participation as of now. So that would be an avoid. Info Edge on the other end is interesting. The stock has been a classical higher top, higher bottom formation. It's been a slow mover compared to the other names in the new age companies, given this is the old one. But the trend is still strong. 8,500 is a trading stop loss. Still remains a buy on dips to 86, 8,800.
Okay, point taken. So that's the view coming in on a couple of these counters. But let's get you some fundamental opinion also coming in from Hiren Ved. We talked about a whole host of sectors and issues. Listen into some of the key ones. Okay, we will try and pull up that soundbite because the discussion was very interesting around a lot of EMS companies, which has become a long-term theme. So Dixon is something which has been in his portfolio for a long time. Trent is something that they're focusing on. The upper end of consumption is something that they have been quite positive on. Hear out his view.
The market's been in a corrective consolidation phase for a while now, and it might continue for some time. But I think the biggest catalyst to my mind more than anything else could be the result season, frankly. Because once there is confidence that earnings can come back and growth can come back in Q4, I think the markets can get back to the races. At least what I get to understand from the Q3 updates is that from a very challenging situation, you're getting to a little bit less challenging situation, right? So it's all about incremental improvement on a quarter-on-quarter basis. I think structurally still the lower end of the consumption trend is still quite soft. We may see improvement from absolute bottoms, and I think the stocks are also reflecting that because the stocks have not done anything for a long period of time. So sometimes more than the performance, it's actually what you deliver versus consensus expectations. So if the expectations are so low and you do slightly better, the stocks can do better, right? So I think again, like in financials, I think in the consumption basket, we still believe that the more discretionary, higher ticket consumption will probably do better, because there the consumer's balance sheet has generally been very healthy, right? I mean, a stock portfolio is up, his gold is up, real estate is up, and I think that that's where the momentum is. So whether it is premium real estate or otherwise, if you want to do lower end consumption, then I think you are better off buying the platforms, because they are aggregating demand across all segments and growing faster than, let's say, an individual FMCG company, right? I mean, a Marico or a Lever is still struggling to do single digit growth. The platforms are still delivering you 20, 25, 30% growth. And I think that's where the story is. I think capital markets is a far better place to be in on a structural basis, right? There could always be a few stocks that can be an exception to the rule, but I think non-lending financials is where I think the action is going to be. So wealth managers, brokers, asset managers, I think that's where money is going to be made on a structural basis. Because it's very clear, right? I mean, if the depositor is moving from not putting deposits to doing SIPs, you better be on that side of the balance sheet. I think by and large, financials is still, more constrained by credit growth, right? The problem with the banks, as you can see from the HDFC update, is that while they've done very well on deposits, but they'd had to sacrifice advance growth, right? So I think, and that's the problem, that adjustment still continues where, everybody needs to shore up their deposit growth and moderate their advances growth. And we have seen a spike in unsecured lending. Obviously, MFI is at the extreme corner of that. But I think unsecured lending has, we've seen a little bit of a spike. So I think, this sector, the lending sector to me is likely to be, as a whole, very middling in its performance. There may be some standout performers. And I think Bajaj finally seems to be coming out of that kind of middling performance where, there was a lot of confidence that came back during the Bajaj Day that they did a couple of weeks back. And I think when the rest of the big banks are thinking of compounding or growing at 12 to 14 or 15, 16%, if Bajaj can grow at 25%, that's a great differential growth rate, right? So I think you'll have to pick and choose, but on the whole, I'm not very excited about lending as a space.
Not excited about lending. Stay with the capital markets theme. That's the view coming in from Hiren Ved from Alchemy Capital. Let's just take in some BTST trades. We're headed in for an over 400-point decline in the Nifty on a closing basis. Kunal, what's your list?
So I'll go with the ban Bajaj Finance, expecting the stock to still remain a lot more sturdy than what it is today. Buy with a target of 7,600. Stop loss could be kept at 7,200. And Brahman Enterprise is something which is given a breakdown. The stock has broken below its previous supports of 1,100, 1,080. So we recommend a sell with a target of 1,020. Stop loss at 1,075.
Okay, that's a sell on Piramal Enterprises, a buy on Bajaj Finance. Naresh, what's your list?
So first is the one Nykaa. The stock has been trying to hold on to the gains today. Stop loss at 169, target price of 180. Second is a sell on MCX, a classical double top and a breakdown here. Stop loss at 58.70, target price of 5700.
Okay, that's the take coming in. Some of the BTST trades going in that way, just clocking down to the market close, and that's definitely a bleak picture. I just want to mark what the global markets as well are up to. Japan, of course, closed in with a near about 600-point decline. Other than that, I don't see much of weakness across the global screen. Definitely not for a Hong Kong or for a Shanghai or for that matter, the way the European markets as well have panned out. In fact, some of them are mighty up in the green. Look at a CAC that's holding up nearly 1% right now. You've got a DAX up almost 90 odd points. And it's a decent move even for the FTSE MIB as well as the Stock 600 as well. Chakri, do you believe that aside of course, earnings nervousness, this could also sort of smack of what's happening with Japan, given that there have been some comments coming in from the finance minister that they may be looking at upping interest rates, and that sort of is bringing about some panic on yen carry trades once again?
You're right. Yen carry trades does kind of impact a little bit. But to compound that, I think we have a domestic issue in India with earnings slowing down. In 2024, if you take the calendar returns, if you're off the Nifty, post-tax is about 4%. So for a 4% port, and that kind of largely explains why the FIIs have sold off, because if the US markets return 22% in calendar 24 versus the Nifty at a 4%. So here, higher taxes, capital gains, etc., all of them have played a role. So what will negate all that is a lower interest rates, hopefully so, and higher earnings growth.
Point taken. So that's something that we need to watch out for. Last 10 minutes of the trading session, and bulls today will definitely be thanking that in 10 minutes the markets will end, because it was looking very, very wobbly. India VIX had shot up quite materially, and we are again below the mark of 23,600. What does it tell you about the markets, Kunal? Are we headed much lower on the index? I mean, 23,600 has been broken on an intraday basis, and not just once, twice or thrice we've gone below that mark now.
Yeah, we are retesting, a critical support point time and again over the last 2 months. So I think from November, lows of 23,200, then we made a high, then we made a low which was slightly higher around 23,600 mark, and today we are retesting the 23,600 for the index. So yes, the market structure over the last two and a half odd months indicates that the indices are still struggling, and there is a lot of weakness into the into the index trends. But then what's also concerning for the markets this time around is that the strongest sector which was there in the recent past, which is Bank Nifty or the banking index, that's the one which is leading the the index to a downtrend. So I think that could be a major concerning point, because we've seen historically that when bank index or the Bank Nifty starts to show signs of a major a reversal or a downtrend, that has a huge impact on the benchmark indices. And post that, when Bank Nifty shows signs of weakness, it becomes very difficult for the benchmark Nifty to try and gather its or regain its momentum and try and come back into any kind of a major recovery mode. So I think the major impact for the market trend would probably rely on how the Bank Nifty behaves. And looking at the structure so far, we still believe that the banking stocks and the large cap private sector banking names, there is still room for many of these large cap private sector banking stocks to head on the lower side by a margin of another 3 to 5%. So that should trickle to the benchmark indices also over the next few weeks.
3 to 5% downside seen some of the banking names. Naresh, would you concur with the view? And if yes, which are the stocks from the banking pack that you would think will come first on the buying list after the correction?
So I would wait out for a couple of days more, because we've been in this market which has been choppy in terms of every time we've felt like a breakout, whether it was at 24,800, 24,000, we flopped. Now on the downside also, we've seen this choppiness. So I'll wait for a couple of days. If it sustains below 49,500, that's the point of time I'll accept that the breakdown has taken place on Bank Nifty. For now, wait and watch.
Okay, just wanted to see what some of these diagnostic names are up to, because, along with our HMPV scare, there's only the diagnostic names which are actually holding out. While, of course, it's just been 2 official cases. We understand there could be a third one perhaps in Gujarat as well. But Metropolis, their quarterly update as well was strong. They're looking at a revenue uptick of about almost 11%. The B2C revenues grew approximately about a 15% on a year-on-year basis. Other than that, of course, Dr. Lal, Thyrocare, these are all names which are also holding out. Chakri, do you sense that diagnostics perhaps, given this entire scare around HMPV, could play out to be a tactical trade at best?
Hopefully not, because the rest of the market will fall if it turns out to be a scare. And but having said that, I think the valuation Metropolis has fallen quite a lot. So I think as a positional trade, I think there is sufficient room. But again, the rest of the world is not panicking on this flu scare. It's only India that's showing most of the downtick.
Yeah, I think we are the nervous lot today, and clearly very, very nervous for the market at this point of time. Nothing is holding on to gains. Most of them have actually given up, and a lot of reds on the screen today, right from an ITC to an HEG to what's happening to Garden Reach and other names as well. What do you make of real estate right now, Chakri? Because again, there are a bit of a divergent view coming in. If you go by the anecdotes, there aren't many buyers, and there are people perhaps out there to sell some of their properties. But if you look at the sales figures that come by or the inventory data, that does point that there is still more room available on the upside. What's your sense as to where the real estate pack is headed?
Good question, because if you look at the real estate companies, it largely now depends upon the kind of inventory that each company is holding. Now, if you look at DLF, their year-over-year sales is very strong, and and that business momentum will carry into at least for the next quarters. So that looks strong to buy. On the other hand, if you look at a Prestige, its volume growth is less than a couple of percent, and therefore you don't have that kind of visibility that you have in a DLF. So I think in the case of real estate, there are pockets which are holding up, maybe a DLF, but not some of the ones like Shobha, where they've run up a lot. Now the inventory is kind of catching up.
Well, you are definitely seeing quite a bit of crack across the realty segments today, like is the case with the rest of the market too. But Kunal, if the weakness in the market were to continue, do you sense that once again it will be pharma to the rescue along with diagnostics like we just marked out?
Yeah, I think there could be a possibility that pharma could stand to outperform. I also believe that there could be a potential revival for many of the underperforming names. Now, there are four sectors which in the last 3 or 4 days has shown signs of recovery. The auto stocks, the auto sector is one of them. You've seen FMCG stocks, many of these FMCG stocks, or rather the FMCG index is coming closer to its long-term moving average after trading, with a margin of almost 10% downside, closer to this long-term moving average. Then you've seen recovery into the energy index and the oil and gas, space over the last 3 or 4 days, which means that there could be a potential, chance that many of these underperforming sectors in the previous leg of the market trend, that's over the last 3.5 odd months from the September, highs of 26,200 approximately. I think we would probably expect that many of these, few of these underperforming sectors could also try and make a comeback. Now it's very difficult to gauge which stocks, but then what we look out for in terms of pattern is relative strength or a resilience for these stocks. Now, for example, on a day like today when the indices are down 1.5 odd percent, Bank Nifty is down 2% plus. If you see stocks within the respective sectors trading with a positive bias or even a flattish bias, that's generally an indication or a first indication that these stocks have inherent strength amongst themselves. And whenever the market gets back into any kind of a bounce back or a short covering mode, these are the names which typically tends to bounce back first. So we look out for those initial signs popping up into these kind of sectors. But I believe that other than pharma index, you might probably have maybe one or two of the underperforming sectors making a strong revival or case of strong comeback.
Yeah, okay. So pharma is one of those spaces where perhaps people can hide. Before we toss it to Snehi for the market close, Chakri, a quick word on the IT pack. We'll start getting the earnings this week, and today as well there were 4 or 5 upgrades that came in on the IT sector, individual names there. What's your sense and what stands out to you within IT?
Clearly that's what the greatest strength is. Infosys will probably report, you'll see numbers as well. So they'll probably beat expectations and their growth will be far higher than that of the Nifty. So, I'd buy both across the board, IT companies, large and mid cap, whether it's an TCS or an Infosys or whether it's a Cyient, KPIT, those kind of companies, ERD companies, all are likely to show stronger numbers, at least stronger outlook, not stronger numbers, but stronger outlook.
Well, that's the word coming in from Chakri on what's looking good in that space right now. But on that note, let's wrap it up.